Hello, listeners. I want to talk about this GameStop and Melvin Capital position, and more importantly, what I wanted to concentrate on is about the lies that CNBC is trying to, and I wanted to expose what they are trying to do, and also I wanted to show some other proof why you should not be believing any news channel, especially CNBC. CNBC is like the worst of all, would never believe them, and I'm going to run this clip and I'm going to show you why.
We have some breaking news right now on what has turned into the soap opera and saga of the markets right now.
This one saga of the market was, as you can see here, it was January 27th. That's when this was telecasted. And today is the 29th. So 2 days after. Let's see what they're lying, and I will debunk their lies.
And that is the story of GameStop. The news to bring you right now is that Melvin Capital Management, this is the hedge fund that had shorted this company that had effectively been attacked by an army of investors trying.
So this is first thing he says, an army of investors attacking Melvin Capital. That's BS, right? There is no reason to attack someone else. There is a buy and then there is a sell. There are two things that you can do with the stock. They took the short position, which is they sold, and worst thing, they sold a position that they never owned at the first place, and to the tune of 120%. I'm not saying they did all of the shorts, but they did majority of it, and a lot of the individual investors. It's a situation where we can buy and we can profit off of it, right? So that's rational. That's the rules of the game. And why are they saying that we just gang up and taking them for a war and things like that? They're lying, but let me expose what they're really trying to do here.
Trying to push up and press up the stock rather of GameStop along the way. Melvin Capital is now out of the stock. They got out of the stock, from what I understand, yesterday afternoon.
Okay, so he says they got out of the stock. So what they trying to what CNBC is trying to convey here is okay. They took a really big short position. You guys call them. You call their bluff, and there it is. They lost. You won. They unwon the position. Okay, the party is over. That's what they're trying to tell. But what they're not trying to tell is um, maybe they unwound the position. There are a whole bunch of others, or they did something else. It probably is not Melvin, or they never their whole position. They probably did a little bit of it. They probably trimmed the hedges or something along those lines. Let me show. All right, I want you to focus on this website, highshortinterest.com. This site does a good work in looking at all the stocks. Obviously, as you can see, GameStop is on the top, followed by AMC. It's heavily shorted. Now, today is 29th. This was 130 something yesterday. It has gone down to 120, but boy, 121% of all their shares. That's how much is the short interest on GameStop is right now, and that's 29th. 27th, Melvin Capital or CNBC said Melvin Capital and won their position. That's it, done. The party's over. So they were trying to tell us, hey, the party's over. The short actually unwound this position. So basically, you won, they lost, go. So what will happen? What they're trying to convey is that message. So apparently, all these individual investors will close a position, which means they will all the buys will go and sell because now it has rallied so much to 347. They'll all try to book their profits, close their position. What happens when there'll be like a whole bunch of sell orders, not enough buy? The price will come down so much so that it will start spiraling. That's what they were trying to trick individual investors to do. Wall Street bets investors, they never believed this lie. They were holding their position so strong they didn't want to. They didn't even want to move an inch. They wanted to acquire but not sell. So they couldn't do anything. And This is a lie. This guy said they unwound the position. Basically, the biggest short is like out of it. And then it just went from 130, not even 130. 130 was yesterday. 130% was yesterday. It went from 130 to 121 today, and it's 121%, right? 100% of all the stock and 21% more than what they own. It's all in short interest. Now, maybe there are more guys getting in at this stage saying, hey, 347, and then maybe other hedge funds are stepping into short this because they know it's going to go. And I know, and everyone who's involved in this knows that everyone knows that this 347, 350, this range is probably it's in a bubble zone. We all know that, but the game here is not. It's not a buying frenzy right now. It's a buying frenzy, knowing that the other side is getting squeezed and they will have to buy, which will run up the stock. That's the whole game. Let's watch what this guy is telling again.
I just got off the telephone with Gabriel Plotkin, who runs that firm. They've taken a rather huge loss. I do not have the full number on what that loss looked like. As was reported yesterday, both Citadel and Point72 have infused something on the order of close to $3 billion into Melvin Capital.
Okay, so he's also trying to tell that Point72 and Citadel, they both infused capital. Otherwise, this Melbourne Capital would have gone belly up. That's the message, right? And then see what he says.
To try to shore up its finances. And Gabe Plotkin telling me just moments ago that the speculation that the firm would file for bankruptcy is false.
So why is it false? They are going to go bankrupt, and because they got a bailout from Citadel, they're not, right? It's GM was going to go bust. U.S. government stepped in, they bailed out, which is factual statement. Now he's telling us of Wallstreetbets and Reddit, people are just lying, right? It's a speculation. It's a lie. These guys are lying.
Some reporting taking place on Reddit, where so much of this discussion began and really created the momentum for, as I said, an army of investors using options to try to press up that price. To some degree, they might be able to argue now that they succeeded. If this was really about vanquishing, if you will, Wall Street, or vanquishing a hedge fund manager. In this case, they did take a loss. They may have not put them out of business, but boy, did they come close. We've been following this story, which has been such a wild one. GameStop shares right now, I mean, I can't, I don't even know what to say. It's up 131%, $342. On any kind of fundamental basis, if the stock were worth more than $20 or $30, I think.
Okay, so if the stock is not worth $20 or $30, why were people shorting 121% when it was less than? That's not fundamental. Why didn't he not talk about that one, right? So this guy has the guts to tell that, hey, it's not worth $20, $30. Now, this isn't bubble territory, we all know, and he's telling someone is going to lose, and he's laughing at it. Look, before this whole thing started, so they shorted heavily. They shorted massively. That's the whole reason why someone even bothered to look at saying, hey, why do we have so much short interest? And this guy has the guts to come and say that 342, that's big. It probably is not worth more than $20. But so when it was not worth $20, when it was actually really worth $6, $9, half of the 20 that he's selling, but someone shorted. Why didn't you laugh at it, right?
$342 on any kind of fundamental basis. If the stock were worth more than $20 or $30, I think it would be something to behold. Real questions, of course, about stock manipulation, about the power of what's taking place on places like Reddit, really what's motivating this type of trading behavior at all. It clearly has nothing to do with the fundamentals of GameStop.
Yeah, we know it's not to do with the
anymore,
fundamentals.
and much more to do with sort of pop psychology of who's going to be left holding the bag. The thing that concerns me most at this point is whether some of these investors will actually start to get out today. They'll look at this and say, we won the game.
Multiple tactics. Oh, Melvin Capital close the position, the party's over. Now, hey, a lot of people will take, they'll sell, they'll close the position, they'll get out. So they're trying to say, oh, you should get out because a lot of people are going to get out. That was not true. They don't know. They didn't have the intelligence of the Wallstreetbets investors. People said, no, we're not selling. We'll buy, but we'll not sell. We couldn't buy. We want to buy more. Brokers ganged up against us. They wouldn't let us buy, but they would let us close, but not buy. That's another collusion with among brokers and the Wall Street firms. They're all on one side, by the way. And this guy is trying to keep telling. The CNBC is like a channel which will constantly come and say, this is going down. It's really bad. And then whoever is promoting that will end up buying because it has gone so much down. They will go and buy, while the individual investors were losing. Today, the scene reversed. Whatever they say, we didn't believe. We did what we did the best, and they're all panicking. They're all upset. And CNBC is a space for, it's a fake news. It's like the penny stock pumpers dumpers. That's what these Wall Street guys like Bill Ackman and a lot of other guys, they'll all come here and then they will fear monger, and the stock will go down. They will buy. They'll make money. That's exactly what is happening.
If that's winning, unclear, where the finish line is in that regard. But
why talk about the finish line? What is a finish line? What if all these guys are long-term buyers? They bought the stock, like Warren Buffett, they will just hold till eternity. They will never sell. There is no finish line. This is equity. Why is he talking about finish line all of a sudden right now? Why are you not talking about finish line for like 500 other stocks?
As much pain as they may have created for Melvin Capital, for example, my great anxiety at this point is the number of retail investors that have been jumping into this literally in the last 24 hours, who very well may get hurt far more and lose far more than some of the hedge funds that were in.
How is that possible? That's not true. The short position will lose a lot more. Their downside is unlimited, upside is limited. If you're a long position, your upside is unlimited and your downside is absolutely limited.
Involved in this. Let's just show you where we are right now. Joe mentioned at the top of the program, Elon Musk tweeting yesterday, which also powered the stock even higher. I mean, there's nothing normal about what you're seeing when it comes to this stock right now. Stock up 51% on Friday, 18% on Monday, 92% yesterday. As I said, soaring in the pre-market. Let's just give you a little bit of a rundown to explain what's happened. Shares popping early in the session. This was yesterday when Chamath Palihapitiya, also somebody who's taken to Twitter and whatnot, really trying to push up this stock. And again, it really raises some important questions about what these people are doing, why they're doing it. I don't like to think of the market as a game, but that's really what this has become, this stock in particular.
Why is it's considered a game when individual investors are investing? Why not when these Wall Street elites were doing exactly the same thing what these small guys were doing?
He tweeted that he bought February $115 calls on GameStop. The night before, he tweeted, "Tell me what to buy tomorrow, and if you convince me, I'll throw a few hundred Ks at it to start." Shortly after noon, then you had Cameron Winklevoss tweeting, thinking about going long GameStop. And then after the close, Elon Musk jumping into the action, tweeting Game Stonk, which is a reference to the popular meme and linking to the Wallstreetbets Reddit page that's been hyping all of this throughout. That Musk tweet helping drive this pre-market move right now. Later this hour, we're going to talk to Robert Frank, who's been reporting on the biggest winners and really, frankly, we'll see the losers of this GameStop trade. But a lot to be concerned about when you think about what's happening here. Where are the regulators?
This is the biggest BS. Where are the regulators? All of a sudden, when the small guys are making money, that makes me absolutely furious. You lied all the time. Now you're telling as if, hey, this is getting out of control. People are just looting. Okay, you're not supposed to take, this is my money, you're looting me. Where are the regulators? Why are they not coming here? Wait a second, I will show you something else, and then I will convince why regulators should not be coming and won't be coming. 18 not too long ago, as a cannabis stock, like $3-4 stock, and just went up, way up, like 300 something. It was like, went like crazy. It says 100%. Probably it was even more, in my opinion. Same thing back in 2008, when the whole world crashed because of the financial, the depression. Um, VW was shorted because General Motors almost went bankrupt. U.S. government bailed them out. Same happened with a lot of other automakers. So people shorted VW, hoping that, hey, that's going to go bankrupt. But what happened? Some hedge fund thought, hey, there was like too much short interest. Let's squeeze it out. They bought all the stocks possible. It made the stock pop from I think $200 or some $232. That's what it says here. I think I remember seeing 240, 250, something like that. Almost close to $300. So these guys have been doing this for ages. I can go over, and then there are like um, a lot of these examples. This pharmaceutical company, I think they had just one product, failing product, and then they took a penny stock, which is a 36-cent stock, ran it up to 45 because there were a lot of short interest. They squeezed the short sellers by buying because they had deep pockets. Now, that's a game that they were playing and they were making money. But if when they were making money, this is totally fine. No regulation whatsoever was needed. Everything was fine. That's how it has to be played. We played. But now this guy has the audacity to come and tell that, where are the regulators? Let me play this again.
When you think about what's happening here, where are the regulators? And is this just the beginning?
What nonsense? Where are the regulators? How can they even possibly come and tell that when these hedge funds, they were playing this game, they were creating the short squeeze by buying and then running the price up and then banking, on all these trades. When in group of individual investors, if they do, so all of a sudden, hey, we need more regulation. If they're losing and someone else is making, they just don't want to. They want to. They are upset. They just don't want that. Like, it's your game. It's the rule is the same, right? But now they're like, oh, you know what? Just pull the plug. Let them not buy more. If they buy, it's kind of run on the bank. I will just go and just keep buying. Obviously, there's like, they'll have to unwind the position. They'll have to buy it for more. They will lose billions of dollars. So they're just unplugging, colluding with all these brokers. They're unplugging Wall Street firms, hedge funds, and the brokers altogether. Those are all Wall Street firms. They're all colluding. They're all against you and me, individual investors. So you got to be really cautious and do not believe. The whole point is, do not believe anything whatever CNBC says. You cannot trust them. They're just lying. And it's a big ad for half hour, 5 minutes here, and there are a lot of these programs are 30-minute programs. There's a 30 minutes of blatant lies. It's an ad. It's an ad campaign that's running. It's free press for a lot of these big money managers. They will come here and then they will rattle whatever they want to say. So when Warren Buffett comes and tells, hey, I bought a mining stock, the mining gold miner just goes like 10-15% more. That's okay because he said people bought. That's okay. But when an individual guy says, hey, there's too much short interest, if you enough people buy, it will squeeze the short position, they will buy and it'll go up. Suddenly all of this is like, you're ganging up. We need more regulation. uh, you know, all sort of nonsense they're trying to tell. This is not true. You cannot believe these guys. This is insane. But anyways, this is all. I'm just venting out my frustration with CNBC and all the Wall Street firms. By no means I'm asking you to take a position with GME. In fact, I would advise you not to to take a position. But if you already know what you're doing, uh, that's good for you. Kudos to the Wall Street Bets group, the investors, to have done this. But if you have no idea, if you're new to investing, or even if you're experienced, seasoned investor, I would advise you to take a long-term approach to investing and invest in good stocks. Obviously, if you know what you're doing, and then you know your risks, and more importantly, whatever you're risking, your risk capital, you should be totally fine to lose everything. If you have that in mind, then go and play. I'm not telling either ways, but again, this is not an investment advice. I'm just venting my frustration with CNBC, how they are um, propagating, you know, fake news, basically. So, anyways, that's all I have. Save, invest wisely, and be prosperous. Thank you.